So let's talk about the Federal Reserve. Now, Fed Chair Powell vowed to raise rates to fight inflation, and he's going to do it until the job's done. So he is very determined at raising the interest rates to get this inflation under control. But to some degree, he's pushing an uphill battle, and he's got to thread the needle here. So let's talk about some key points relative to what happened this week. First of all, Jerome Powell said Thursday he is strongly committed to fighting inflation despite the current regime's out of control spending. In other words, if we're going to be printing money, if we're going to be spending more than we're bringing in, that is going to create a problem, and that's making it very difficult for Powell to get the inflation under control. Second, the Fed has raised the benchmark interest rates 4 times this year. I mean, that's a lot, with the Fed fund rate now set at a range between 2.25 and 2.5. And that's before the rate hike that is actually coming next week that he announced 2 days ago?
Yep.
Tuesday? So what happened Tuesday? The S&P reacted in early hour trading to Powell's scheduled 0.75 rate hike with a sharp drop at the open. And it ended the day down 4.32%. And realistically, when you're looking at Wednesday was kind of an up and down seesaw in the S&P 500. Didn't move a lot. And I think everybody's just trying to digest how that's going to really react in the future. Yep. So it's really interesting the way things are playing out right now. But I think from an economic indicator standpoint, let's just call it what it is. We're either on the heels or in a recessionary period. The interesting thing also is they don't usually call it until when?
After.
Yeah, like months afterwards. Yep. So let's mark our calendar today, and let's look back to see when they called the recession.